And joining us now is Jeff Small, president of Arbor Financial. Jeff, are markets getting ahead of themselves? And what are you telling your clients heading into the new year?
Well, obviously the sentiment is still very strong in the market. The consumer is very strong. Expect a 2% economy next year. We're not going to see a recession. The Fed will step in and lower rates if necessary. Operation Twist has created a new amount of leverage and buying in the market, combined with the China trade deal that we have on deck. Things are looking pretty optimistic right now.
And so, Jeff, China is looking to boost U.S. imports starting January 1st as it deals with an economic slowdown. How concerning is the volatile economic data that's actually coming out of the world's second biggest economy?
Well, I think it's incredibly concerning. I mean, China's next hope, the next hope for the global growth in the economy spurt is going to be coming from China. So as they open up their markets to global trade, there's going to be a new inertia in international investing, which really in the EM has been left behind the last couple of years as the United States stock markets have dominated growth globally. Everybody else's market has really kind of been in the tank.
Jeff, I wonder about the market in 2020 because there are calls, at least as long as President Trump is president, that this stock market still has at least a 10% run higher in it. What do you put the chances of another record run in 2020 at?
Well, as long as we have the greatest motivational speaker in business as president, when we go back and we look at history, 75% of the time we've had a double-digit growth. The market's gone up another 9, 10, 11% the following year. And so with the consumer strong and positive GDP and China trade on deck, the market's going to keep expanding. So I would look for something just below single-digit or double-digit returns for 2020.
How can we justify Tariff Man as a great motivational speaker for business?
Well, there's a psychology to business that, most of the pundits and the media and the financial realm are starting to finally acknowledge. And that is, it takes a businessman to run the United States. And you have to admit that Trump's numbers are absolutely incredible. Any president in history would love to have the lowest 50-year unemployment rate in history, as Trump does. He's done some incredible things. One of the best things he did was lowering the corporate tax bracket to 20%, which is the same tax bracket as China. And so that revitalized American companies to re-domicile back to the States. And we had a surge in manufacturing employment that we've never seen in the last 15 years under President Trump. Just to name a few of his accomplishments economically. But the psychology is there. There's a psychology to the markets. There's a psychology to the economy. And when people feel good about that, they spend money and they invest.
One thing, Jeff, that is hurting psychology is the losses that we've seen this year in Boeing, right? The stock's still up roughly at several percentage points on the year and up today, but this comes after some major executive changes with the CEO resigning effective January 13th. What broader concern does Boeing halting production of the 737 MAX 8 present the economy in the new year?
Well, as one of the largest Dow components, I think that the rest of the economy is going to do well, but Boeing has got a really big speed bump here, or big potholes, I would call it. They've got to find a way to redefine their Supermax planes and get them back up and running and in production. Until that happens, I am not an owner of this component. I do not see it dragging down the Dow at this stage. But, if things get worse, you never know, anything's on the table. And, sometimes stocks can be irrational.
Additionally, looking forward to 2020, I mean, we've already seen some of the projections come in for where banks and investment firms are aiming for even the S&P 500 to end. And it's really not too much higher from this point, as the consensus has come in around 3,300, and then even at the top end, it's been about 3,450. And so with that factored in, thinking through how their projections are layering in, how does this also factor in a Democratic presidential nominee? How does that impact the 2020 economic forecasts?
Well, I'm really glad you asked that question. That is really the sleeping elephant in the room that can impact the markets dramatically. As we see the rise of, let's say, what we call socialism or a progressive agenda, which would impact and increase costs on corporate America and increase taxes, that could cause corporations to dramatically tighten up, stop buying back their stocks, stop spending, of course, CapEx, and that will hurt the economy more so than anything else. So we're entering in an era of political risk as our countries become so detached and so bipartisan, it could finally affect the markets going into an election year. And so I'm not positive about a Democrat being in there. I think it will take a Democratic moderate. Andrew Wang is really the best choice from a Democratic moderate perspective. But I think people and politicians are underestimating the fact that the American citizenry would prefer to have a non-politician at the helm. And the problem is people are only as good as their training. And as I said earlier in the talk today, it really takes a businessman to run the United States of America. The United States is a business.
But national security and that policy know-how is very important, Jeff. And certainly in the past 6 months, we've seen a ramp up of those who served in President Trump's administration at one point, even his cabinet, saying that he's not taking appropriate steps to keep the national security in safeguard. Are you looking at geopolitical risks in the new year and how those could potentially impact the market?
Of course, there's always geopolitical risks. I don't think President Trump is a geopolitical risk. I think that would have already have happened if there was really a geopolitical risk there. I think that's kind of just the bipartisans or the left people in the media stirring up the pot, so to speak. You know, Trump could cure cancer tomorrow, and I'm independent, by the way, I'm NPA. He could cure cancer tomorrow and they'd vilify him for it. So no matter what he does, they'd vilify him for it on the leftist side of the media. And so I'm not concerned about that at all. The United States is stronger financially and militarily than ever before. And I do see us being respected across the borders economically again, unlike we were before, where both parties are really responsible for exporting all of our wealth and jobs and job creation and technologies over the last 50 years. Trump's put his foot down and said, hey, we've got to reverse this. And it's going to take longer than 4 years to fix it. But at least somebody is standing up and saying, hey, we've got a problem here. Let's fix this.
John Bolton, formerly the U.S. National Security Advisor under Trump, saying over the weekend that President Trump and his administration have failed when it comes to North Korea. Obviously, North Korea, a key focus for Americans and investors here as we head into the new year.
Absolutely. Jeff, we're going to continue watching all of these things and much more, as we know you will. Jeff Small, president of Arbor Financial. We got to leave things there, but thank you for joining us today.
Thank you.